First of all, a quick review of 2011. Your thoughts? It's been a tough year, I think, if you're looking at equities. But then on the fixed income side, obviously we've seen much higher rates, making that a little more attractive and obviously weighing down on the equity market. And then for alternative assets, we've seen a little moderation in the declines in the real estate space.
Yeah, sure. It's been a very challenging year. We've had unprecedented, political turmoil in the MENA region. We've seen turmoil also, political stymie in the U.S. economy. And all of these factors really have led to capital flight away from, or net capital outflows from, emerging markets and also frontier markets. I think what we've seen really is that money market yields have edged up. They're really at mid-teen levels or to high-teen levels. Treasury bills have been quite high in terms of yields, and that's been a good thing as compared to 2010, where we saw yields at single-digit levels. On the property space, we've seen that sector improve somewhat, although the market is still far from being, bubbly and effervescent. The bond market has been good. Yields, money market yields have dragged up bond market yields, and so that's been quite a good thing for people initiating new positions. For those holding existing positions, well, the hold to maturity accounting treatment has shielded investment managers from capital losses in that space. So that's been a good thing. The real blight on the copybook of 2011 has come from the equities market.
Indeed.
We've seen, the 18.44% decline on the third quarter really put paid to a good year in the equity space.
Indeed. I think I remember at the end of the second quarter, I was one of that thought that we should see, even if it's a moderate rally for the end of the year, but unfortunately that hasn't turned out.
Absolutely.
But 2012, let's look a bit further ahead.
Okay.
What are your thoughts?
Yeah, sure. 2012, I think it's going to be another challenging year. I think volatility is here to stay, and we all better become a lot more adept at managing of the volatility. A number of things. It's an election year in the US, so the quagmire in the US, politically speaking, is going to be there. It's also an election year in France, presidential elections in France. So I think all of these things are having an effect upon the ability of the political leaders in Europe to, bring together a solution that is really going to put paid or solve the European sovereign debt crisis.
Right.
So we have an issue there.
Yeah.
I think also, I mention all of these markets really because in recent years, the level of positive correlation between our markets and European markets has actually risen.
No, very valid point. Very valid point. 2 years ago it wasn't the case.
Absolutely.
Now it's anything that happens over there is having a serious bearing on what goes on around here.
But that being said, I think that money market yields are going to remain high. Treasury yields to me also are going to remain high. I think one of the things that we need to look out for in the first quarter of 2012 is going to be how the central bank deals with the foreign exchange levels. Yes, we saw the CBN governor devalue the Naira from 150 to 155, but interbank levels are already breaching 160 levels. So how we handle that is going to be, are we going to see interest rates rising further? Are we going to see with exchange rate reserves sitting around about $33 billion, there isn't really that much scope to defend the Naira that much more. So our interest rate is going to rise. Are we going to see another devaluation? Are we going to see a mixture of both? These are, I think, very key questions.
And in that context, what's the prospect for equities?
Absolutely. I think these questions continue to constitute something of a cloud over the performance of the equities market.
So first quarter, second quarter?
I personally, personally, I feel that it's going to be a tricky one for equities. However, you can't rule out, something of a flaw being formed on the equities market as a result of positioning ahead of the financial year 2011, earning releases.
Do you share the view that valuations are attractive for banks, perhaps?
I think clearly valuations are very attractive. I mean, people were initiating positions Q2 and earlier of 2011. So equity markets have declined even further. So, valuations must be attractive still. However, sentiment and, how things are reacting, how, the global economy is reacting, it's going to have an effect.
You're in the asset management business, and obviously there are big issues facing your business right now with the performance of the equity markets, the history of the declines in 2008, 2009. How do you deal with these issues right now?
Sure. I think the way it has to be dealt with is really by holding a diversified a diversified portfolio across all of the asset classes.
I'm even looking at it from the perspective of growing your business. There's a view that sentiment for asset management is very weak right now because in 2008, 2009, the investors who were investing themselves lost money, but also the asset managers lost money.
Absolutely.
So where's the value added? And that's the question many are asking.
Good. That's a very, very key point. And that's where investment managers have to step up their game. There isn't that differentiation between what individuals are achieving and what professional asset managers are achieving. So, but I think that going forward, we're going to have something of a separation between the boys and the men in the field. And I think that those who are able to consistently show superior investment returns are going to be those that are going to do well.
Quick point on new products into the market. ETFs, something that the NSE has been talking about for this year. We'll probably see the first gold ETF being listed in Nigeria in another few weeks. What are your thoughts on the sentiment that could generate for the equity space in general?
Sure, I think it's a good thing. We haven't really traded, hitherto we've not really traded gold in a big way in Nigeria. And so having an ETF coming in is going to be a good thing. However, I really don't see it being that much of a major game changer in the short term in terms of driving our markets. Really, because there's just really the sentiment really isn't there.
There's so many other things weighing on the market right now.
Absolutely.